All right. Good evening, everyone. Welcome to tonight's webinar. I am your host, Brian, and I'm a dealer here at Philip Capital. Now, before we start, I will just put out a poll right here so I can gauge if you can hear my mic with no issue. Can you see the poll right now? I've just launched it. If you can hear me, just click yes. If you can't hear me, click no. And I can see that most of you can hear me. So thank you all for voting. Let's get straight into the webinar. All right, so before we start, let me bring you through just a quick introduction to Flip Capital as well as the products and services that we provide. So Flip Capital was incorporated on the 7th of October 1995, which is around 30 years ago, and we are a wholly owned subsidiary of Flip Capital Holdings in Durham, Berhad. Formerly, we were known as Flip Futures because back then we only offered futures and CFDs, but since then we have started to offer stocks as well. So we decided to rebrand ourselves into Flip Capital. We are a trading participant of Bursa Malaysia derivatives, as well as a participating org of Bursa Malaysia securities, and we are also a holder of the Capital Market Services license, which means we are legally allowed to offer you these products and these services. All right, so we have around 11 Phillip Investor Centers, known as PICs, across Malaysia, with our headquarters located in Kuala Lumpur. So that means we have offices all throughout the nation, such as in West Malaysia, we have offices in JB, Melaka, Penang, and here in East Malaysia, we have offices in Kuching, Cebu, as well as KK. We are open from Monday to Friday, 9 a.m. to 6 p.m. So if you want to know more about our products, you can drop by at that time and we will have leaders there to assist you. All right, so this is the page for our Bursa Excellence Awards, which we have won throughout the years. Just recently, we have won the Best Overall Derivative Trading Participant, as well as the first runner-up in the Best Retail Derivative Trading Participant back in 2023. Okay, so this is a chance. This is a place where I would like to take this chance to thank our clients because it is you who have been able to let us achieve these goals together. So I thank you and I wish you all would continue with our partnership. All right, thanks for trading with us. All right, so we have a wide global network where we are situated in around 15 different countries throughout the globe, all the way from Western countries like, the US, the UK, France, to Asian countries such as Singapore, Japan, and of course, Malaysia. And essentially, what this global network means is that we have a wide global coverage. Yes, we do offer products across multiple asset classes from these exchanges, right? So exchanges such as the CME Group in the US, Eurex in Europe, as well as Singapore, you have access to SGX as well. Essentially, what that means is if you want to trade any products listed in these exchanges, and we also offer those products, you can trade them through us, right? So with that in mind, I want to try to convince you that we think we are your one-stop solution for your trading, right? So first off, we offer multiple products ranging from futures, including local and foreign futures, such as local futures such as the FCPO, FKOI, to good old stocks and equities, both local and foreign stocks, and also the good old contract for difference. We offer local Bursa share CFDs as well as foreign shares and index CFDs as well. So with that in mind, not only have we won multiple awards throughout the years, we've also offered many products, but we also offer support in the form of 24-hour broking and execution support by our dealers. We also have advisory services where we update our clients on the latest market news, but also we have no platform fees. So if you trade with any of our in-house built platforms, we do not charge you any platform fees, so that saves you on your trading costs. We also offer our clients free one-to-one coaching sessions, right? The first session is mainly on product knowledge. And in the second session, if you want to, it will be on platform coaching. We also offer free weekly market calls. On the left, you have the weekly market views and updates every Monday at 11 a.m. by our research team. And on the right, you have the live counter technical analysis by our in-house technical analyst, Zain All, every Monday at 8 p.m. just before the New York Open. All right, you can find this information as well as our upcoming seminars and webinars through this QR code right here. So if you're interested to join these free events that are coming, you can scan this QR code and it will bring you to a page on our website. It's completely full of charge. You don't have to be our client to join. You just have to scan this QR code and register from there. All right, I'll pause here for a bit while you guys take a screenshot or scan it if you want to. I'll just pause here for a bit. All right, coming up, we also have a free online account opening process. So if whatever that I've just said intrigues you in any way, you can open a stocks, futures, and CFD account right here free of charge through this QR code right here. You can scan it and it will bring you to our online account opening portal where you can just open the account at your own convenience and your own time. All right, next up we have our trading platforms. The first one is FlipNova, which is our in-house future trading platform that our clients use to trade both local and foreign futures all in one platform. It has multi-platform support, which means it is both on mobile, both on the Apple App Store and Google Play Store, as well as tablet and also laptops. So it doesn't matter which device you use, you can gain access to this trading platform. Okay, and the cool thing is that we are actually one of the only brokers in Malaysia to have partnered with TradingView, which means you can trade through TradingView itself, or if you don't want that, we also have taken the charting UI and pasted it on our FlipNova platform. Right. So for those that don't know, TradingView is the world's largest social trading platform because it has really nice to use UI. Okay. Next up, we have our stock trading platform, Poems Global, which is a platform for both local and foreign shares. Once again, it is also on mobile as well as a laptop or desktop, and also both on the Apple App Store and Google Play Store. So if you're interested in trading local and foreign shares all in one platform with one of the lowest fees in Malaysia, you can do so through this platform right here. Right, last but not least, we have our Flip CFD Trader, which is the platform that our clients use to trade CFDs. All right, next up, we have our promotions. First off, we have the Trade BMD Products and Win promotion running from February to the end of April this month, where if you trade BMD products such as Crude Palm Oil Futures, Gold Futures, or the FKOI Futures, you can win a chance to win up to an iPhone 16 or 350 ringgit cash rewards when you trade these products, right? It runs to the end of this month. So if they interest you in any way, you can scan this QR code right here to know more. Of course, TNCs, they do apply. Next up, you can also trade COMEX 1 ounce gold futures with us at only USD 0.99, running from January all the way until the middle of April of this year, where you can get exposure to gold with a very little margin required. So if you want to know more about this promotion, you can scan this QR code right here. It will once again bring you to a page on our website. All right, finally, let me introduce you to our speaker for today. Finally, the main, spotlight of the day, Mr. David Low, who is the Managing Director of Top Infinities and Darren Berhad, which is a proprietary trading firm that specializes in trading global commodities, currencies, equity indices, as well as financial derivatives. David has over 25 years of experience in the listed derivatives industry and has helmed leadership positions in the futures broking division of major investment banks in Malaysia. Mr. David was also the past president of the Malaysian Futures Broker Association from 2018 to 2019. Wow, that is a really impressive resume, so I won't keep too much of your time. I will pass it straight to Mr. David.
Thank you, Brian, for that fantastic introduction. Good evening, and a very welcome to this evening's webinar. Just hold on a second while I share my slides. There you go. I hope you can see my slides perfectly clear on your screen.
Yep, we can see it, no problem.
Fantastic. Okay, just let me adjust the screen, and we're good to go. Yes, and yeah, a very well welcome again, everyone, to this evening's webinar where we talk on this very important subject, especially those of you who are trading crude palm oil, because currently crude palm oil is at the crossroads. Okay, and what does it mean when it's at the crossroad? That means something big could be happening, and let's hope that this evening's talk will give you some idea of where you can go and what types of big shift in CPO prices you can expect in the next couple of months or half the year. Right? So let's move on. Right, that's me. Okay, just a quick one. Basically, what I do is I hire professional traders to trade for us on all types of commodities, global commodities, currencies, equity indices, and financial derivatives. That's what we do. So we build a team of traders, professional traders. We also have this the trading academy where we have professional traders speak about the education, speak about the experience, and give courses on how to trade as a professional in the derivatives and financial markets. Okay, so that's basically a quick one. A quick disclaimer. Okay, whatever information we share today, it does not constitute a recommendation or an offer to buy or sell any of these financial instruments that we talk about. Okay, so if you want to deal in it or buy and sell any of these futures contracts that we talk about, please talk to your very friendly Philips dealer, and they'll know what to do for you. All right, that's the gist of this disclaimer. Okay, so this is what we will cover this session. Basically, in the first part of the session, we will be looking at the fundamental drivers. What is the thing that is driving crude palm oil prices? Okay, in the next quarter, we'll have a quick snapshot of what happened in Q1 and what is going to happen in the next 3 months or half year. Okay, very big things are moving the markets, right? The second thing is after we look at all the key fundamental drivers and see where it's going to take palm oil prices, then we go in and look at the technical readings. The technical readings are great for looking at timing and looking at which phase the market is at this current moment. Is it in a bear phase? Is it coming up from the bear phase, or is starting out to become a bull phase? Right. So technical readings later will show you and tell you how this market phase is looking like. Right? Then we look at the potential opportunities in the trends that we spoke about, including the price directions from the technical readings, right? Both also for palm oil and also for other historical drivers of palm oil prices, right? So that's what we're going to do this evening. Okay, so bull or bear for crude palm oil prices. Okay, so this is something that has been what do you call that in the minds of futures traders for quite some time, right? Because if you look at the palm oil prices, okay, later we'll look at the chart. It has been consolidating for quite some time. It has been in the range trading for quite some time. Okay, so what currently, in terms of the key drivers and three drivers and also the technicals, are going to make it move to which direction, right? Whether to be a bear or to be a bull. So let's explore it, right? Now, what I want to do is we're going to have a quick rewind of the last 5 years in terms of palm oil prices, okay? And it is important, I think, to understand the dynamics of what has happened because the last 5 years basically encapsulates all the different drivers that are going to play in the next 6 months, right? So by understanding what has happened since 2020, we'll be able to see and realize that there are a few drivers that really move the market, right? And this is what we're going to cover. Now, let's look at 2020. Of course, 2020, everybody will remember during the COVID-19 shock and recovery, right? Global prices of commodities, including palm oil prices, basically collapsed due to the demand shock, right? Everybody's was locked down. Nobody had the mood to be celebrating anything, right? So everybody was restricted, and basically demand collapsed, okay, for every single commodity, right? So for palm oil prices during that year in 2020, it fall almost 30%, right? So the low right over here around uh, the uh, the 2000 ringgit per metric ton level, okay, that was the low in the year of 2020, right? But what was interesting, it did a very sharp V-shaped recovery, okay, from the bottom at 2000, okay, during the second half of 2020, okay. So this basically works through until 2021. 2021 was a year where we saw supply demand tightness, okay. There was this quite robust global demand recovery, okay, post coming up from the worst part of the COVID, right? And then because of the COVID situation, the production in Malaysia and also in Indonesia was stagnant, right? Basically, you don't have the labor, there were no workers, okay, and this basically restricted the harvesting of the fruits, the palm oil fruits, and of course the palm oil supply tightened a lot. Okay, so 2021 was a supply demand tightness, and you could see prices started to move, okay, from the bottom of 2000 and steadily climb. In fact, this is a very, very what should I say? This is a 45-degree climb, a very, very aggressive climb upwards. Okay, and also this is also what do you call that? Because at that time, crude oil as well, and later we'll see the relationship between palm oil and crude oil. Crude oil also did a very fantastic recovery, okay, and that fueled the biofuel demand, and this also increased and pushed palm oil prices high, right? So as it climbed towards 2022, right, it was seeing new highs, multiple new highs in terms of the palm oil price, and actually in the early part of 2022 we had this historic price spike, okay, by various factors. Number one, of course, the Russian-Ukraine war disrupted, okay, erupted and then disrupted the sunflower oil exports, okay. So basically tightening the global vegetable and edible oil situation. And then Indonesia, also due to all those kind of situations, imposed a temporary export ban, okay. If those of you who were participating, at the time in the Palm Oil Conference, the beginning of the year, we received that news, okay, right before lunch, and the prices totally went exploded in the afternoon session, right, when Indonesia imposed the temporary the export ban, right? So prices really spiked up and exceeded the 7,000 ringgit per metric ton price in April, right? What followed that was a very sharp corrections. Okay, the world started to fear that the China demand and the China recovery wasn't that great, so everybody was afraid of that. In fact, world global commodity prices from the mid of 2022 started to come down, and actually it was like a waterfall drop, okay, in terms of commodity prices, right? So now what has happened is since this huge drop in mid of 2022, right? You can see here, right, July, it basically found some kind of a bottom right here. And the prices have kind of stabilized and moderated over the last 2023, 24, and 25. You could see that it was trading in a range, right? So basically, I think in terms of demand moderation, people are saying, okay, then supply chains improve, okay, labor came back, and then we were able to bring palm oil into the market. Okay, so this basically softened the prices, but then it stabilized in this range between 4,004 and also around the 3,003 levels. Okay, so this was a long consolidation, as you can see, from July of 2022 right up to the mid of last year. Right, so in 2024, okay, beginning of the year, there was all this talk about the El Nino effect, the patterns reducing the yields, okay, of palm oil. Okay, so that started to have take a bullish tone in terms of palm oil prices. Okay, and as Indonesia announced its new what do you call that biodiesel mandates, right? B35, and then in 2025 this year to go B40. B40 meaning that 40% of the diesel is palm oil, 40% blend. Okay, and this started to create a very strong what do you call that tightening of the global inventories. So you could see from July of 2024, at this bottom here around the 3006 level, prices started to climb. Okay, and prices moved steadily throughout the year, and of course towards the end of the last year as well, weather was pretty bad in terms of both in Malaysia and certain parts of Indonesia. Harvesting was very challenging. Okay, and it basically tightened up the supply, right? And this in this particular region, okay, that palm oil did something that it has never done in its history. It was became the most expensive edible oil in the world. Right, we'll look at that again in the next couple of slides. So this is what has happened, and you can see basically in terms of the various factors. You see war and geopolitical tension. Okay, you could see weather effects on palm oil prices. Okay, you see looks at the global demand. Okay, look at labor shortages. All these are the main drivers of palm oil prices. Right. So let's go in and dive deeper. Okay, so where are we now? You're right over here around the 4,400 price level. Okay, where are we going from here? Okay, are we going to ride the bull, or are we going to be clawed down by the bear? Right, there's a magic key there. We will talk later in the charts. Okay, but I want to come and show you one very important relationship. All right, this relationship is something in the early years of palm oil. There was not so much of a direct relationship. But currently, this relationship with another commodity in the world is a very important relationship to look at. And that relationship is the relationship of palm oil prices with crude oil prices, right? So this is very important now, right? CPO and crude oil, okay? Currently, if you look at the last 5 years, okay, there is historical high correlation. Okay, this is because of the factor of biodiesel. Okay, of course, this is the great debate about food versus fuel, right? Using what do you call that? Traditionally, food product and edible oil and can turn it into fuel. Okay, so energy markets, crude oil markets now influence vegetable oils via this factor of biodiesel. So biodiesel and crude oil and palm oil, they are now totally interrelated, right? So this is a very important relationship to remember. All right. So when you look at palm oil prices, also look at the crude oil prices. Okay. So this is very important. And any factor globally that affects crude oil, okay, is going to have also a almost direct impact on the CPO prices. Okay, what I have below, you can see right over here, the lower panel here is an indicator called the correlation coefficient, right? So if it's one, it goes between a one and -1, right? Where and zero is the middle line. Zero is no correlation. Okay, so you can see that it's positively correlated, right? The line stays most of the time above the zero line. That means positive, and a lot of time it stays at near close to one. Okay, that means it's almost one in step, one by one, every step along the crude oil price. Okay, this is very important. So crude oil relationship and energy markets move in tandem with CPO. Okay, so this is a very important thing I want to stress right at this present moment, because any factor in this world that affects crude oil will affect palm oil. All right, so let's move on. All right. So, who is the biggest guy now making the whole world go into a turmoil, right? So, those of you who have been following Liberation Day, right, yesterday, April the 2nd, where Trump announced his a full, what do you call that, portfolio of tariffs to the whole world, right? So I mean that is the most recent one. We are still digesting what are the effects, okay, and we have not even come to the counter effect is whether the parties or the countries that the tariffs were imposed will have their retaliatory what do you call that, tariffs against the US, right? So this is what we call the trade war. Basically, it's been started since he came to the office. He's been using tariffs. Okay, every day you hear about his tariffs. Okay, so this guy basically is now the prime mover of uncertainty and volatility in all markets. Okay, not only in the commodity markets, right? So whatever actions, Donald Trump does is going to affect all these factors you see here, right? In terms of geopolitics situation, in terms of inflation, right? So all his actions are currently making things very expensive, right? Basically, he's imposing a tax on everything, so things are going to get expensive, right? The U.S. dollar is moving, okay. Interest rates, bonds are basically being bought up. Okay, so there's this movement in interest rates as well. The yields, okay, and whether Mr. Trump is driving the U.S. economy into a recession that has been bandied around for the last 1 month. Okay, the actions by the president, whether it's going to drive, the U.S. Into a recession, and if it U.S. goes into a recession, okay, it will have rippling effects throughout the global economy, right? Right. So this is something very important to look out, and the action of this one guy is you. This what you want to watch is what he does, right? So we'll talk about his policies and the effects, right? But this is a quick snapshot, okay, of the Q1 markets. These are the energy markets, okay. Basically, energy markets started the year right at about like oil, WTI was trading about 70, did a nice push up, and then because of Trump's policies of drilling oil and bringing supply into the market, basically you saw crude oil come off, right? Gasoline has come back off from the starting point, so it's gaining pretty well. Diesel is also down. Okay, natural gas had a good run as well, starting from this year, ending where it basically is mid of January. Okay, it's stabilizing over there, right? Ethanol, we don't really follow this. Okay, then let's look at agricultural commodities, right? Our agricultural commodities really a mixed bag, all right? So corn started here, and basically currently in beginning of April is much the same as where it started. Now soybean oil is actually doing very well, right? It started right at the low beginning of the year, and then now it's up. Okay, in fact, soybean oil is one of the top 10 performing futures contracts in the world, right? It's up about 16%, right? So soybean meal not doing that great, right? Ending lower from the start of the year. Oats doing okay as well. Oats has gone up. Okay, rough rice, no, not doing too well. Soybeans basically a bit flattish, just slightly up. Wheat basically ending up where it started in the year, right? Canola basically back to where it was beginning of the year. Cocoa, of course, yet last year had a fantastic run. Okay, but prices were really very expensive, and then basically what you see, cocoa prices have come off from the start of the year as well, right? Cotton basically where it was the same. Orange juice, strangely, nobody likes to drink orange juice, or it's too expensive. We had a huge drop. Okay, your coffee is still staying expensive, right? So this is in terms of, you look at agricultural commodities, it's been quite a mixed bag. Okay, but if you look at those that particularly into soybean oil, right? Soybean oil has been gaining. Okay, this has a very high correlation with crude palm oil as well, right? Right. So let's move on. So let's look at the Trump 2.0 playbook, okay, and its effect on the markets. So his stance on the U.S. economy and financial markets, he was voted in, okay, and the policies that he promised to put into place, number one, it was to deregulate. Basically, all those restrictive regulations, he wants to deregulate. He wants to liberalize the market, right? He wants to put in substantial tax cuts. Okay, so we haven't seen that yet. Okay, that's supposed to be his next move, right? Immigration restrictions and all that. illegals and all that. He wanted to stop all those illegal immigration. So basically, a lot of this he has put into place. Okay, we have yet to see those tax cuts come, right? But based on that premise that he came to office, actually the financial markets were very happy, right? So when he came to office, the equity markets actually basically, on the exuberance of that win, okay, markets really moved up, okay. But then what happened next was probably not expected by the markets, although he was the one also started the trade war and tariffs during his first term, right? So he had this policy, he had a lot of tariffs, okay. He put tariffs down and he pulled back. So they created a lot of unpredictability, a lot of uncertainty, even right up till now, right? So basically, in terms of the markets really hate uncertainty, right? Because they view uncertainty as a risk, right? So basically, in terms of the policies that going in, all these tariffs creates the fear. Okay, this trade conflict create the fear of inflation, okay, and also a stagnation in the economy, right? So what's worse than a recession in terms of economic conditions is where you have high inflation and basically an economy that is stagnant, right? And this is what we call, there's a term for it, and it's called stagflation. And stagflation is uh, uh, the policy makers and the central banks don't have medicine for stagflation. Okay, there's no medicine. They don't have they don't have a remedy for stagflation, and that's something that a lot of the markets are afraid of. Okay, you have your inflation going up. Okay, tariffs are making everything so expensive, and then you have basically no growth, or your economy is really very, very, or even worse if it goes into recession, right? So stagflation is basically something that is very, very tough. Okay, and stagflation basically plays out for 3 to 4 years. You have a very difficult situation because there's no medicine, right? So earning prospects, this is where the financial markets and the stock market basically didn't look good for them. Okay, so this basically dampened their enthusiasm for the stocks, right? So because of rising costs and also potentially weaker demand in a high tariff environment. Okay, so in terms of financial markets and U.S. economy, this is the impact. Right, in terms of trade wars and tariffs, right? This been hogging the headlines for the last couple of weeks, right? So when he came to office, the first thing he was started to start this trade war again. Basically, return of the trade war 2.0. Okay, he upped the tariff, okay, and make it even larger scale. Okay, so the gist of what happened in April yesterday, right? Basically, he unveiled a series of tariffs. Okay, global tariffs, a baseline 10% on all U.S. imports, right? And then reciprocal tariffs targeted at different duties or tariffs that the other countries impose on U.S. goods. Right. So basically, you can see a whole list, right? If you go on the internet, or that you can see the whole list of countries which with different reciprocal tariffs. Now the question is this, okay? What are the other countries going to do, right? Is the European Union, South Korea, China, and Japan basically even before April 2nd came about, they were already preparing for some potential responses, okay, some potential retaliatory measures, okay, and what are those, we don't know yet, right? Some may come tomorrow, some may come in the next week, okay, but things are going to heat up for sure, right? Some countries are not going to take the tariffs from the US lying down, so they're going to fight back, okay. Then what happens, okay, once this thing starts, right? So this is going to be a very, very potentially very ugly situation, right? So this renewed trade actions basically have a very deep impact on commodity markets. Okay, number one on disruption. Okay, and number one on the prices. Okay, on renewable energy and fossil fuel. Okay, we said just now it's very important to monitor what happens to the crude oil markets and energy markets. And his Trump's policy basically on fossil fuel is he wants America to have energy dominance. Okay, so he wants to be the biggest guy in terms of energy in the world, right? So his policy is to drill as much, okay, drill baby drill, get as much oil and gas out of the soil in the US, okay, sell it to the world, be the biggest dog there, selling to the world, right? So basically, in terms of climate initiatives and all those renewables, he's basically not a fan of it, lah. Okay, he basically ignores it totally, right? So what he did in terms of policies was there was this fast pace of deregulation, basically to fast track the permits for oil drilling, for new pipelines, and even for coal production, right? Energy dominance, okay? So he's basically backtracked on all his predecessor Biden's initiatives on renewables, right? So renewable has taken a backseat, okay, for the US, okay, not necessarily over the world, but for the US, okay, because of the policy of wanting to be the biggest guy in the energy space. Okay, on geopolitical positioning, and this is an extremely critical point to look at. Okay, this have very very deep significance in terms of the prices of commodities. You saw in 2022 when the Ukraine-Russian war started, basically spiked up the prices in terms of commodities and also in palm oil, right? So whether the conflict in Ukraine can be resolved, okay, Trump's trying to get a negotiated settlement. Whether that happens, we don't know. Okay, even if it happens, perhaps a ceasefire of sorts. But will peace be achieved, and can it prevail? So that's the biggest question, right? Because the Ukraine Russia conflict is very deep seated. It's just not basically these two countries. Okay, NATO is involved, right? And NATO is very deep into it. Okay, whether all the investments that they put in the last couple of years in the Ukraine war, okay, are they just going to let go and let it settle that way? Okay, so he basically Trump also decoupled from NATO in terms of defense, right? So now the NATO European allies have to look at their own defense because the US policy is basically not supporting them in their defense anymore, right? It's basically you have to take care of yourself. So Europe basically ramps up their defense spending in terms of having to have greater self-reliance in their own security, right? Now the wild card you want to really keep tab on is what's going to happen in the Middle East, right? Okay, Ukraine is one thing. Middle East, the other thing that you must watch very closely, what's going to happen to Iran. Okay, why Iran? Because Iran is one of the big producers of crude oil to the global market, right? If Iran's oil is taken off the market or there's sanctions and all that, and Iran oil cannot come out into the market, okay, that's have a very, very, what do you call that, big impact on oil prices. Okay, so this is something you want to look at. Middle East conflict, and especially Iran. Okay, and because Trump has always had this very hardline stance towards Iran, right? So things could really escalate, and things could escalate fast. This is something you want to monitor. Okay, let's move on. So we've done with Trump. So you know this is one of the biggest factors you will watch. Now we dive into something more mundane, back into palm oil drivers. Okay, so basically palm oil drivers. These are the key eight key drivers of the prices. Okay, if there's no big things like war, okay, like tariffs and all that, all these mundane fundamental drivers will move in. Of course, it will come to play every single time, every single year. Okay, whether it's one of them, okay, labor supply, you know, is very important to get the palm oil out of the estates because it's very labor intensive in terms of bringing up palm oil. Global economy, we will speak about that and the impact of Trump just now. Okay, biodiesel policies and renewable energy, it is very important, right? The price of substitutes, okay, other types of edible oil, the prices of that, okay, geopolitical conflicts, we already just came off from that slide. Okay, laws concerning tariffs and regulatory barriers, and of course the exchange rates. Okay, so this we will dive in a bit deeper. Okay, first let's look at the supply demand situation for palm oil. Okay, one of the things of why has kept palm oil prices very firm is because production of palm oil has tapered off. Okay, the growth of palm oil production has tapered off, so it's basically plateauing. Okay, in terms of Malaysia, okay, last year in 2024. Production only increased marginally by 4.2%. Okay, so it's basically just ticked up. Okay, and this is because of one of big factors is labor availability, because we're able to get the harvest out, okay, from the plantations, right? But it's only a 4.2% growth, right? In 2024, the Malaysian palm oil exports actually rose, okay? So we had a very good export in 2024, okay? Production was just basically up slightly, okay? That's why at the end of the December 2024, our stocks actually ended pretty low, right? 1.71 million tons compared to 2.29 million tons. So that's a quarter of the in terms of the inventories left end of the year, right? Because of the production increase was very small, and then the exports were pretty good, right? So in terms of 2025 production projections by the experts, basically they're looking at Malaysian palm oil at 19.5 million tons, right? So again, it's a very small move from last year's production of 2024, 1934, 19.34. Now it's 19.5. These are the projections. So it's really, the growth is very, very, very small, right? And even in Indonesia at 48, Indonesia, of course, the largest producer in the world, 48 million tons. Okay, basically the export supplies from both Malaysia and Indonesia are unlikely to see any significant growth. Okay, that means there will be not really a lot of extra oil available for export. Okay, and there's a reason why we'll get into that, right? Basically, a lot of this production thing is because production is something you cannot, like, it's not like switching a pipe and then tomorrow, you can increase production by 10%, 20%, right? Unlike crude oil is a bit different, right? So the OPEC can basically say, okay, I want to produce more oil, so they pump more oil, right? But in crude palm oil, you're basically taking the fruits and you harvesting from there, right? So if the current situation is what's happening is trees, right? The palm oil trees are aging, right? And there's very limited new land to plant. Okay, there's been restrictions in expanding plantation, what do you call the acreage in Indonesia, and basically in Malaysia, there's no more land available for planting, right? And the third thing, of course, is environment curbs, right? It's not there's this thing about environment friendly kind of plantation. So this basically creates a very tight supply scenario, right? Basically, that's why it's plateauing off the production, right? So this is the situation which is basically keeping prices firm because the supply is stagnant. Okay, we move to the next factor, and very important, as we say, biodiesel policies, right? The biodiesel mandates basically again tightens up the CPO export availability, right? Okay, why? Indonesia, the biggest producer of palm oil in the world, right? Basically, in March of 2025, their B40 mandate gets fully implemented, right? That means 40% of the diesel is of a blend of this CPO, right? And what Indonesia is ambition is to do B50 rollout in 2026. Of course, there are a lot of challenges according to the experts, right? But if Indonesia commits to do that in B50, uh, basically the analysts say that if that is fully rolled out, okay, it's going to take an additional 4 million tons of palm oil out from the export availability, right? So this is going to make the palm oil already, growth of production is not there. Now we have this biodiesel mandate taking basically exportable out into the global markets. So global markets will be very tight, right? Because of this. So Malaysia, of course, also think of being green, right? We're stuck a bit now at B20, right? But that commitment to continue to commit to biofuel, okay, basically ties the CPO price outlook to crude oil trends, right? We said that just now during the chart there. Basically, it basically ties it to fuel, right? So in addition, okay, so global biofuel, okay, not only in Malaysia, Indonesia, and these parts of the world where you use palm oil for biodiesel, other parts of the world are also the US and Europe as well. Okay, they also have their biofuel trends, right? They also want to go towards green, and they want to be, but they use other types of vegetable oil, right? But so this is the question of debate of food versus fuel, right? So even the other vegetable oils, they are going to take it and make biodiesel, right? That again takes out edible oil market availability, right? CPO is tight, and if vegetable oil are going to go into biofuel, turn it to fuel, then the problem starts that the global vegetable oil market starts to tighten. Again, when it tightens, what does that mean? It means that progressively, edible oil is going to be more and more expensive. That means prices are going to rise, right? Because of this situation. Okay, so in terms of the global economy and key markets that we're looking at, of course, the largest markets for palm oil in the world is India, China, and EU. Okay, much less EU. EU used to be a big importer of palm oil, but much less now because of their policies and their rules and their regulations, right? But looking at that, the palm oil market is very unique in terms of usage, right? Palm oil is one of the largest consumed edible oils in the world, right? So this is basically uh, driven by population growth, the growth of population in the world, right? And this consumption because of population growth. Okay, and the other part is again, the increasing biofuel mandates. These are basically taking out a lot of the demand, right? So in terms of India for edible oils, India basically is a very price sensitive market, right? So because now palm oil is very expensive compared to other oils, right? So they are able to switch their allegiance. They don't know they don't have to buy palm oil anymore. They buy soybean or sunflower oil, right? So India is very flexible in terms of that. So they will moderate their usage depending on which one is the cheaper alternative, right? Whereas China is a very strategic buyer, right? China, in terms of the characteristic, when prices are very attractive, they will load up on that, okay, and they will store it, okay. So they're a bit like counter cyclical buyer, right? So they will buy during low prices, okay, and store it, right? EU, of course, as the third largest market, declining demand due to their policies, right? Now, if you look at the IMF outlook for the world economy for this year in 2025, basically you can see the chart here. There's a very flattish, it's not great, in fact. In fact, the 3.3% bull for 2025 is way below the historical 2000 to 2019 average. Okay, that average is higher at 3.7%, right? So this growth rate over the next 2 years is below average, right? So it's not that great. Okay, so maybe in terms of demand, in terms of what do you call that, world economy, the world economy doesn't look too great in terms of the outlook by IMF. Okay, so basically in their report in January, their title was growth, global growth seen to be divergent and uncertain. Right, so this is the world is a very uncertain place now. Let's move on and talk about this very important thing, geopolitical wild cards. Okay, so look out for this. Okay, the trade war is basically started already. Okay, what's going to happen in Middle East? Things aren't really looking that great. A lot of flare-ups, right? The ceasefire between Israel and Hamas, basically, they are fighting again. They are shooting at each other, right? Again, escalation in Iran, very important factor to look up. This is where it could disrupt global oil supply, right? So the sweeping tariffs are already happening, right? China, Canada, Mexico has happened in the beginning of the year in February. Okay, now it's global. Okay, April the 2nd is US against the world, right? So this is going to have a very big impact. Okay, even these three countries, China, Canada, Mexico, already can affect 1 trillion in global trade. Okay, so the global retaliation is where worries a lot. Okay, so what if the world retaliates and then the US then again, throw punches? It's so nobody knows. Okay, this is something that is going to be digested. You will keep your eyes on lookout on all those news portals for what's going to happen, because things are really heating up right over at this moment. Right, let's talk about currencies. Okay, another very important driver, the Malaysian ringgit, Indonesian rupiah exchange rate. This is a very important thing, right? You see a chart right over here. Okay, this dollar against the IDR and dollar against the ringgit, right? You basically can see since September of last year, the US dollar has gained against these currencies. Now, in terms of currency exchange, of course, a if the emerging market currencies are lower, then there'll be what you call that in terms of the commodity prices are favorable because the international buyers will see it as cheaper, right? So basically, if the US dollar is strong, okay, that will work in a favor in terms of palm oil demand because palm oil is cheaper for international buyers. Okay, so a depreciation in the ringgit and the rupiah journey makes palm oil cheaper and more attractive, right? So, yeah, you can see maybe people will be more attracted to buy palm oil. Okay, so this is important thing to look at as well, right? Weather is something nobody can control, of course. Okay, so this is something you have to watch all the trends. Okay, what has happened towards end of last year and caused a huge spike in our palm oil prices as well is basically the seasonal monsoon. Yeah, so of course towards the end of the year. The monsoon comes in Malaysia. Okay, really is a seasonal thing, right? But these days you can see the severity of the weather, even in seasonal types of expected what do you call that weather patterns, and even some not expected, right? In terms of the north and Johor towards the beginning of this year, right? So this has basically severely impacted the harvesting of activities for palm oil, right? That's why you can see that the production coming out into market has become a bit tight, right? So not only that, of course, in terms of even Kalimantan, in southern Sumatra, this has impacted, and these are large areas of palm oil plantations for Indonesia, right? And these are the supply disruptions that have been keeping prices well supported. Right. So now let's talk about substitutes. Okay. So CPO, palm oil has become a premium over all the substitute oils, right? It's become the most expensive oil. It's even outdone soy oil, which is historically unprecedented, right? You see this red line here. This is a chart of the BOPO spread. What's BOPO spread? Is the bean oil against the palm oil spread. Okay. So traditionally and historically, bean oil always trades at a premium to palm oil. Okay. And that has changed, okay, since the last quarter of last year, where palm oil has become more expensive than bean oil, right? It's basically trading now near the zero premium discount, okay, but it's still somewhere along this line, and below this line has been historically unprecedented for palm oil. Okay, so two things can happen. Of course, either palm oil prices move down, okay, to go in equilibrium or go back to the normal historical relationship, or bean oil, okay, moves up, okay, to meet the palm oil price. Okay, so this is something that we have to see, okay, because already demand rationing is happening in the countries that import palm oil, right? In terms of India, Pakistan, and China, they may reduce palm oil imports, okay, and switch to the cheaper alternative, switch to soybean oil, switch to sunflower oil, perhaps, right? So palm oil actually could face a immediate demand erosion if it continues to be in the premium. Okay, so pressuring the prices to adjust downward. Okay, so this is probably something that will happen, right? Unless the overall other external factors are bigger or more dominant. Okay, but then this particular premium would tend to basically move back to historical relationship, right? So this is a relationship. This chart is until 2013. You could see the bean oil always trade in premium to palm oil. All right. So we have to watch this as well. This one relationship is very important. Okay. Now, of course, these are all the policy and regulatory impacts that you want to watch. Okay, in terms of Indonesia export controls. Okay, whether they're going to ban this, ban that, or they're going to do quotas. Okay, so Indonesia policies are very important because they are largest producer. Okay, and their policy basically you can see that in terms of Indonesia, their policy prioritize the domestic affordability. Okay, that's their top priority, right? To have domestic affordability. They have a large population, right? Cooking oil needs to be affordable. Fuel needs to be affordable. Okay, so in terms of Indonesia's stance, in terms of their controls and regulation policies, is basically uh, move and focus towards that, right? So in terms of course, the Indonesian biodiesel program is very huge, okay, very huge initiative by the government, right? And this is a major structural demand increase for palm oil that never used to be there. Okay, so as the biodiesel programs continue to move up to higher and higher blend of CPO into the diesel, this has never happened previous perhaps 10 years ago. All right. So Malaysia, how does it what do you call that? Malaysia's impact in terms of basically the export taxes. This is something they want to traders need to look out. Okay, so there are duty adjustments basically to manage the competitiveness as well, right? So they also have to look at demand. They also have to look at the neighbors, what Indonesia does. Okay, Malaysia will also have to be competitive as well. Right. In terms of the EU, of course, EU very restrictive policies in terms of they don't really like palm oil, right? So there are laws that they have passed in terms of renewable energy directive red and the deforestation EU DER. All this basically reduces the long-term EU demand. Right. So keep tab of all these policies and regulatory impacts. All right, so those are the wow, that's a long session on the fundamental drivers. Okay, hopefully now we get a better picture. Okay, we want to now jump into the technical outlook, which is very, very interesting. I promise you. Okay, so let's first look at the weekly chart of palm oil. Okay, all right, I'm going to interpret this chart using Elliott wave. Okay, so some of you may be familiar with Elliott wave, some of you may not be. Okay, but basically, Elliott wave basically reads the various phases of the momentum of the market, and in a bull run, okay, of which over the last 5 years, actually, palm oil has been on a bull run. Okay, basically, what the Elliott wave says in any bull run, okay, there will be a series of five waves, okay, three impulsive waves and two corrective waves, then followed by a correction. Okay, so what phase are we in now in terms of the weekly chart? Okay, so what has happened is during the 2020 super recovery, the mid 2020, right up to the spike in 2022. Okay, this is the most aggressive wave, and the most aggressive wave is what we call a third wave. Okay, that's the characteristic of Elliott wave reading. Is the third wave is the most aggressive and tend to be the largest and longest wave. Okay, in terms of the price range. Okay, then it will be followed by a what do you call that? A correction, wave four correction. Okay, so we have a wave one, which is the first impulse wave, okay, followed by a two, okay, and then we have a three, then we have four. Now, after four completes, we have this very interesting phenomenon. We have wave five, okay, and wave five characteristic is wave five will exceed wave three high. Okay, so what this means in terms of this bi-weekly chart is the wave three high of 7,000 ringgit per metric ton, according to Wave, is going to be exceeded. Okay, now this sounds really, really already people at the time saying 7,000 is a crazy price, right? Now, basically, this chart says that interpret Elliott wave is basically tells you that this is the wave five. Once it unfolds, is going to exceed the wave three high. Okay, so this wave three high at 7,268 for the third month active month is projected to be exceeded. Okay, and the target for the fifth wave zone is between 6,506 to 8,536. Okay, so that's why I'm saying it's very, very interesting, right? Yeah. Yeah, this was there already even 2 years ago when I spoke at the East Malaysia Palm Oil Conference, right? This chart was already there, right? And this was still the something waiting to happen. Okay. Now the thing is, what will basically push up all this? Okay, so it's all related. Okay, things if we move up to this level and exceed 7,000, okay, a lot of things in the world will change. Okay, and perhaps it's going to be a very difficult and challenging world at these prices when your edible oil is so expensive, right? Things are gonna look, but we have to see. But this is what the Elliott wave will read looking at this. right? So this is a big base at 3006 is a form of very, very important base, right? So even for technical analysts, when they analyze a range and range breakouts, right? So basically, you see this range has been there for how many years, right? So since 2022 until now, it's almost like 3 years, right? So if the technicians will say, okay, if I take the length of this particular x-axis and then I put it up, okay, I just flip it 90 degrees to the y-axis, you will see that that's supposed to be the range, okay, that it can go to, right? That will exceed even the wave 3 high, okay? So technically in terms of the longer term charts, okay, it's very speaking implying that a very huge bullish condition may come, okay, right? So we will have to watch all those fundamental things. And if you notice, as we went through the fundamental drivers, each of the fundamental drivers were actually pretty bullish in terms of the direction, right? Except for world global demand for, the global economy doesn't look that great, so maybe global demand won't be that great, okay? But the rest of the factors are all pointing to a possibility of higher prices, right? So let's move on. Okay, this is bi-weekly chart. This is the daily chart. What is the daily chart? Basically, daily chart points to the next possible the next 4 weeks trading, right? So at this current moment, the it's also already corrected to wave four. So now currently is the wave five move. Okay, pardon me for that. That's my trading alert. Okay, something must have moved through my, my trading alerts. Anyway, okay, pardon that. So yes, so yeah, wave four now looking at wave five. Okay, so this is now the wave five. What do you call that move? Okay, now what is interesting, I want to point out here is right at this region between this here the first impulsive wave in this upward move is a wave that nobody believes. Okay, a lot of traders don't believe that this is a new baby bull starting on a fifth wave. Okay, that's why there's this sell down. Okay, and if for technicians out there, if you measure this wave four low to this wave five high, okay, basically, okay, let me I don't know whether you're hearing my alerts. Okay, I'm just hearing it in my mic. Okay, so if you look at this, the wave, this is what we call in a subwave interpretation. This is a wave one. Okay, and this is a wave two. Okay, and wave one and wave two is where traders don't really believe that the trend is still going up. Okay, so and once the wave two finishes and it's basically landing at a very nice area that's supposed to land. Okay, this is around the 60 to 70% retracement area. Okay, and if this wave one and this wave two, and what's the next wave? Next wave is wave three. Okay, this is a wave three within this larger wave five. Okay, and wave three are the most aggressive waves. Okay, so watch out right over here. Okay, yeah, if markets start to move and confirm the wave three, you will see that a very aggressive move up. Okay, you will try to challenge. Okay, as we say, wave five always challenges wave three high, right? So the recent 5,200 levels, which was done in November, it may be challenged, okay, in the next 1 month or 2 months. Okay, so this is something you want to look at. Okay, in terms of even the daily chart is showing some bullishness, right? So that's the longer term weekly chart. Okay, weekly chart normally is something that longer term. Okay, 6 months down the road. Okay, or 1 year down the road. But the daily chart is basically telling you the trend in the next 1 month. Right, let's move on and look at other things, okay, connected to it. We want to look at, of course, crude oil. Okay, what is the trend, or what are the charts saying in terms of the elite wave for crude oil? Right, this is a weekly chart. As you can see, a very long consolidation from the mid 2022 high, okay, which oil hit a high of 130, right? Basically, come back down, wave four again, and what is wave five? And a very similar chart. We saw just now the correlation between palm oil and crude oil. Okay, the charts are basically the same. So if palm oil is in wave four, Then CL is in wave 4 currently. Of course, palm oil crude oil has challenges as well right over here. The move up here, this is because of the Trump effect, right? It's basically bringing new oil supply into the market, right? OPEC also, I think, yesterday announced that they will increase production. Okay, so currently it's staying around this, but the very important support is around the 65 and 64 level. You can see it has tried and tested it multiple times. Okay, from this point in 2022, first test, second test, third test, fourth test, fifth test, sixth test. Okay, and normally, if there's so many tests, that means this particular base, right? This consolidation base is basically rock solid, right? If it really breaks through, then all hell will break loose. Okay, but this looks like a very rock solid bottom, right? So this is where the base that possibly the wave 5 run up will go, right? And in these charts, Elliott wave basically say that crude oil can go in the wave 5 bull. Okay, it can commence once this whole consolidation is finished, and it projects the price at 147, which is exceeding the third wave high of 130, right, and possibly even at 199. Really, these are charts. Okay, yeah, I don't really know how the world will look like with oil at 150. The huge inflation, right? Things are going to be rather difficult at those prices, right? So let's move on and talk about the daily chart. What does it say? Okay, daily chart looks like this is what we call after impulsive move of 5 waves, you will have this ABC move, corrective wave. Okay, so the Elliott wave basically saying that at this current point, it looks like the ABC correction has come to a point or a zone that it has completed, right? So the next move will be the next impulsive wave. Okay, coincident with the weekly chart. Okay, so there's what we call a bullish divergence right over here, where prices come down, but the momentum is not confirming a lower momentum. Okay, so this is basically a signal or a omen of the market has found the bottom and is going to turn the other side. Okay, so this is a bullish divergence. So even CL and CPO charts are looking pretty similar. What about the dollar? What does the dollar say? All right. So the dollar is also interestingly, this is really, it seems like we're looking at the same chart. Okay, even though I'm flipping different assets, right? So you see again a fourth wave base and then a potential of a fifth wave. Okay, so basically what the US dollar index basically is saying that dollar is going to rise. Okay, although we've seen some weakness over the last couple of days, but what this chart says that dollar is going to rise. Okay, and it's going to rise above the level it was in July of 2022, right? And what does a strong dollar mean for commodity prices? Right, we said that depreciation in ringgit and Indonesian rupiah is good for demand of palm oil. So if a higher US dollar, that means there'll be possibly higher potential demand for palm oil. Right, again a very bullish scenario for palm oil. Okay, we move to now to the GSCI. Okay, this is the Goldman Sachs Commodity Index, basically a basket of global commodities, a bit heavy, a bit on the energy products. Okay, but what does it say as well? Okay, what is interesting about this chart is I want to go back to the year of the 2020 where there's this huge run up in commodity prices, and all the experts and all the big banks are saying, hey, this is the commodity super cycle, right? Okay, of course, now the last 3 years they're very quietened down on that rhetoric. Okay, but you see the last climb up to this level, which was 845 on the GSCI index. Okay, it was very close to the previous super bull, the commodity super cycle of the previous time was 888.50, right? So it was close, but it didn't exceed. Okay, but again, Elliott wave, okay, similar charts again, so this is like deja vu. Every chart also looks the same, right? Interestingly, there is going to be a fifth wave. So it's basically again pointing to a global commodity run up, which could even exceed the high of the July, this what we call that run. Okay. So we have a really very interesting convergence of how the charts are looking, right? It's not only one chart saying, it's multiple charts that sit telling the same story, right? So I'm basically done in terms of the presentation. We now go back to Brian. Brian, we can do Q&A now if we have some time for Q&A.
Yep, all right. Thanks, David. Let me just pass the screen back to me. One moment.
Yes, do I have to stop share? I
No, it's
can take it.
okay. I'll share on my
All right.
end. No problem.
All right.
All right. All right. Thank you, David, for the insightful presentation. We have now come to the section for the question and answers. So if you have any questions for Mr. David before we let him go, you can leave them right here. There will be an icon at the top right hand corner. Please, do take advantage of Mr. David while he's still here in this call. He has given a wonderful presentation and you have to use it to the maximum before we let him leave for tonight. Okay, so any questions, you can leave them in the chat box, right? On mobile, it's on your top corner on your right hand side. It should be there. You can click on it.
Don't be
It's a
shy.
chat box. Yeah, don't be shy. Don't be shy. Completely fine. Oh, okay. So we have one here. Okay.
Mm,
So this is an interesting one. It is since we have the global tariff announcement by Trump 2.0. How are these likely to affect crude palm oil exports to countries like Europe, for example?
mm. Okay. Of course, Europe, Europe and us and in this region, they don't have much of a quarrel, right? It's the US currently that's the biggest guy there, the biggest gorilla with all the boxing gloves. Now, what if you look at the previous tariffs in the first series of Trump's Trump 1.0, right? Basically created disruptions in supply, and also initially is the demand. Okay, demand contraction. So prices actually, commodity prices actually go down initially, right? So because of tariffs, there's basically number one in terms of economy, people are less optimistic. Okay, of that. So in terms of demand, that's going to take a hit, right? So prices may come off. Okay, so that's the thing. Okay, that's the only one of those bearish factors. Okay, but whether the tariffs are going to create a lot of supply disruptions or not, because global trade is now basically totally interrupted. Okay, now this supply disruption has a bullish factor in terms of commodities, right? So there's a big of a balance here between demand and supply constraints. But again, palm oil being the one of the most largest consumed edible in the world, and supply is basically very very short. Okay, so if there's any disruptions in terms of supply or even some uptick in demand, okay, watch out for China, right? China has some green shoots in terms of the economy. Exports have been up, the PMI have been positive for the last couple of months. So if there's any shift in slight increase in demand, the prices of palm oil, because of the lack of supply, is going to fly, right? But in terms of immediate effect, is there will be a dampener on demand, and possibly longer term there is going to be some because of global trade is going to be disrupted. There will be some disruptions in supply, right? So there's a balance of factors. I hope that answers your question.
All right. Thanks, David. Okay, we have another one, which is how much market share did soybean oil and sunflower oil gain in India and China in the previous quarter due to CPO's premium pricing? And in your
Oh, oh.
opinion,
Mm,
and in your opinion, would that negatively impact CPO prices further?
okay. I don't have the numbers offhand. Okay, this is for people, the experts that crunch the numbers every day. I only interpret numbers in that sense. So the thing is this: basically, what we are seeing is all the alternative oils also ramping up the production. Okay, so there is the other types of edible oils coming to the market. Okay, that will put a bit of pressure on palm oil prices. Okay, in terms of the demand rationing because you are expensive and the rest are cheaper than you. Okay, so this situation can be corrected very fast. Okay, so if the demand for the other types of edible oils were to be taken up in the market. Okay, and because as you say, in terms of market share, palm oil is like more than 50% of it is exported, right? So it's a huge, large market share. So the rest of them don't really play a very big part, except for, of course, soy oil being the second largest, right? So the rest of them are basically small players, right? And you can never produce enough to fill that vacuum. Okay, although palm oil price is expensive, to fill that demand vacuum that the world needs in terms of edible oil, right? So in terms of that, I think there will be some balancing of the prices. Okay, so there may be, okay, as people buy up the other types of oil, of course those prices will go up. I can see from soybean oil has been going up as well. So there'll become a point that palm oil will basically come back to equilibrium, the traditional relationship. Then then it will move accordingly together, right? So this premium perhaps cannot last that long. Okay, market forces will make it come back to the equilibrium. So sorry, I don't have the exact all those big numbers that you have. I think people like Oil World, Thomas, you can visit his website, and I think they have very good numbers there. I'd highly recommend you to go to website and check that number out. All right. I hope that answers your question, although not completely.
All right, thanks, David. Okay, we have one more. We have one more, which is more on the trading side of things. It is
Mm.
I oftentimes see the market go in the opposite direction after a supposedly bearish or bullish news release.
Mm.
Why does that happen in trading, and how can I take advantage of it?
Okay, very interesting. Okay, right. So yeah, so trading on news is something that uh, okay, you as for individual traders, right? By the time the news hits you, you're too late already, right? Because there are a lot of people who has faster access to news, right? So in terms of trading news, I think in terms of as we as professional traders, we use news and fundamental data basically to look at the longer term picture, to look at the overall big picture of where the market is going, right? But in terms of timing, we prefer technicals. Okay, so technicals will give you a bit more edge in terms of the timing, right? So as a trader, you'll be, I think, disadvantaged. Okay, sometimes bullish news turn the other way, then you wonder what what happened, right? And then the news come up, but basically the market probably those people who have faster access to news or news is so much. It's the world is so interconnected right at this moment. Every single thing is a leverage in terms of price, right? So it's not easy, okay, as an individual trader to monitor all types of news in this world, right? Already, I think in terms of all those big professional trading firms, right? They have sentiment and analysis, they have fundamental analysis, and these are all run by artificial intelligence, right? So you can never be faster in that sense to respond to news, right? So in a way, I feel that if I personally, if I trade only news and react to news, I'll be always on the short end of it. Okay, so if you're feeling that you're always on the short end of trading news, you know the reason lah, because basically you don't have the advantage, right? So you need a better tool, you need an extra tool if you're trading on news, right? Yeah, or fundamental data, right? You need to add it together with technical analysis, right? So one of my best friends, who's a big time trader in Singapore, he says you add fundamental analysis, which is FA, and you add technical analysis, which is TA. You add it together, it's called FATA. Okay, FATA. So so right, you're getting a short end of the stick trading fundamentals only. Try to use timing tools like technicals. Right. I hope that helps you.
All right, thanks, David. Last call for any questions. You guys bombarded him with quite the questions. So, any last questions, last call right here before we let Mr. David go on with his night to have a good rest after a long day? Any other questions? Any other questions? Three, two, one. Okay, no more questions. Thank you. All right.
Thank
So
you.
with that in mind, if whatever Mr. David has presented interests you in any way, or if you like any of our products, you can open an account with us through this QR code right here. Stocks, futures, CFDs, all in one platform, all in one account opening platform portal right here. You can do so through this QR code free of charge anytime at your own convenience and your own time. Okay, so with that, if you are interested after the event to contact us, you can do so through here. We are on multiple social media channels, including Facebook, YouTube, which this video will also be posted. The recording for this presentation will be posted tomorrow. We are on Telegram, LinkedIn, TikTok, as well as Instagram, where you can find all of the information on our official website, flip.com.my. And these are our QR codes for our two free Telegram channels for stocks and futures, respectively, where we post updates and market news for certain asset classes. Okay, free of charge to join. You can scan this QR code or screenshot and you can join there on after the webinar. Okay, if you are interested, you don't have any questions now, but you want to ask us any questions, you can reach out to the branch nearest to you. This is our contact details right here. Um, you can take a picture, or you can also just find them on our website, flip.com.my. You can find all the information that you need on there. So with that being said, thank you all for joining tonight's webinar, and also thank you, Mr. David, for your time. I will see you guys in the next one. Thank you all. Good night.
Good night. Bye bye.